COVID accelerated a digital shift that was already underway by maybe 4 to 5 years. And for us at Checkout.com, it validated a lot of the theses upon which our business was founded, and I think probably for a number of the fintechs in the room as well. So some of the trends that we've been seeing, a sunsetting in cash payments, adoption of new payment methods. I recently read a statistic. I think there was a 90% increase in digital wallet usage in Australia in 2020. Really moving from brick and mortar to online and cementing the importance of e-commerce in the financial ecosystem.
We're seeing more and more fintechs which have started with one specific vertical. They're starting to expand their product proposition across multiple other verticals, essentially.
Firstly, I think in terms of the payment space, you're seeing a disruption in terms of both speed and cost. So I think you're going to see particularly cross-border payments made much quicker and much cheaper. Secondly, in terms of lending markets, I think you're seeing fintechs that have a greater ability to analyze data and therefore lend to segments which weren't otherwise covered by banks. So I think you're going to see a greater share of perhaps MSME and consumer type lending done outside the banking system. And thirdly, I think that those type of changes will then force change in themselves on the banking sector, so that ultimately you're going to drive down costs to the consumer and you're going to improve accessibility.
With COVID coming through, people who may have not previously wanted to or considered switching to a digital challenger bank have either been forced to or would now consider a digital alternative. And so I think it's really going to force the traditional banks to, get their act together and change. Otherwise, I think the battle will definitely continue.
I think you're seeing banks actually in general be quite slow in terms of innovation to anything digital. Partly this is because of regulation, but partly it's also because the nature of the skill set you need to operate in a digital environment is very different. The ability to set up integrations, APIs, that sort of thing, it's just not necessarily within the normal banking sector makeup. And so I think you're seeing these challenges emerge with these different, more tech-oriented skill sets. And I see that continuing.
I see the initial battle transforming into a long-term collaboration via better understanding of the strategies that the neobanks and fintech players are putting in place, but also tapping into their vast expertise and essentially retransforming themselves into service providers for fintechs.
I think partnership between banks and fintechs is essential and is very likely going forward.
Limited internal resources and unlimited outside competition have prompted many large financial institutions to fundamentally rethink their approach. They are increasingly looking at the value proposition of fintech and are aware of the potential for their own businesses.
I think whether that's leveraging data to build more effortless experiences and personalized solutions for our customers, or by linking complementary services that give customers that one-stop shop for their financial management. There's just huge opportunities out there through partnerships to deliver that enhanced experience.
Fintech innovators have done a great job at unbundling the packages that I think banks have historically offered. And we see ourselves at Checkout as uniquely positioned to both continue to provide innovative payment solutions to our businesses, but also partner alongside some of those more traditional financial services as they adjust their model going forward.
I think what's likely to happen is that you're going to see banks increasingly start to work with fintechs, perhaps in a channeling capacity or an off-balance sheet capacity, becoming the ultimate capital provider to the fintechs, but using the fintech technology and the sort of analysis that they can't do themselves.
Fintech has a huge role to play in increased financial well-being, whether that be through proactive signposting and educational content to help customers make more safe and more informed decisions around their money management, or improved flags to help us identify if a customer may be vulnerable or having financial difficulty and be able to offer support proactively. But I think, fintechs really should see themselves as someone who can make a huge difference in customers' lives.
There's a lot of interesting tools that weren't possible before that are enabling us to reach communities that have been underserved and to actually make meaningful change in that area. So I think just generally speaking, the ability to create new innovative solutions is unlocking a lot of value that wasn't possible before.
What fintechs can do is take a broader variety of data, and different fintechs do it in different ways, but take a more holistic approach to lending and therefore create inclusion in a way that banks have never been able to.
I still think there's a lot to do in the domain of financial advisory and like personal wealth management, essentially. I think this is one area which is a bit difficult to scale, but I think there's a lot to do there, essentially.
If we look at the last 18 months, I'd say the most exciting trend in terms of fintechs has been the payment space. You could segment this across different areas of payments. I think in the cross-border payment space, bringing down the cost of transferring money between countries has been huge. And not only that, also speed. So if we give an example, in the old days, even 5 years ago, you might pay something like 10 to 15% if you're transferring money from developed markets into an emerging market. And it might take 3 to 5 days for the recipient to receive their cash. We're now seeing providers that can do that almost instantaneously and at a cost which is perhaps 10% of that. So I think the payment space has been maybe where we've seen the most over the last 18 months. I think in terms of going forward, I think this goes into then providing lending products to underlying users. So things like buy now, pay later, things like MSME lending, asset finance, all this sort of thing, and the ability to do that in a digital and very quick way.
Fintech has matured from just focusing on one pain point and vertical to now being almost like a lifestyle product. So it's not just about getting your card and your bank account and doing transfers and using your card, but it's more about how does this all fit into my lifestyle.
It's just having the technology at our fingertips to allow us to create solutions that break down barriers for SMEs and really help grow their business, whether that be through making tax digital and through the dashboards, money management tools through open banking, to, enhancing security and being able to give more business access to responsible lending through data that we may not have been able to do so before.
Every business that sells goods and services has an opportunity to rebuild their business model in a way and become a fintech in their own right. And so I think that just in and of itself is super exciting. If you believe that really any business can operate in payments and leverage the new tools and technologies that are being developed to improve their customer experience and drive more revenue to their bottom line. Yeah.